Strong, that's how Investec has described its annual financial performance. The bank and wealth management group has posted a 13% rise in adjusted earnings. That's as the firm navigated a tough operating environment by implementing strategies to increase client activity and loan book growth, which was supported by the high interest rate environment. A final dividend of 19 pence per share has been proposed. This takes the total payout to 34.5 pence, which is an 11% increase on last year's dividend. Bytes shareholders have made bank. The software company has declared a final dividend of 6 pence per share. This is a more than 17% jump on last year's payout and takes the total for the year to 8.7 pence. A special dividend has also been proposed of 8.7 pence per share. This comes as the firm posted a 12% rise in revenue and a similar rise in adjusted operating profit. That's thanks to demand for its IT services. Tsogo has come under pressure. The casino owner has posted a 13% decline in annual profit after tax. The firm, which counts Gold Reef City and Monte Casino as part of its stable, has felt the pinch of constrained consumers and says consumer behavior has also changed since the COVID-19 pandemic, and this has also had an effect. A final dividend of 40 cents has been declared. This is 30% lower than the previous period's payout. Platinum prices have lost their luster, and this has taken the shine off Teresa's results. The miner has delivered a 25% slump in headline earnings at the halfway mark. Nevertheless, the firm has declared a dividend. Shareholders will get 1.5 US cents. This is half of the interim payout made last year. Bidcorp says its constant currency trading results to the end of April reflect a very solid performance. That's even as the food distributor had to operate in an environment characterized by anemic economic growth, supply chain disruptions and constrained consumers. Looking ahead, CEO Bernard Berson says the company has once again delivered record results for the 10 months, and so he's confident that the firm can continue to deliver real growth for the rest of the financial year. Capital and Regional has become hot property. The UK REIT has confirmed that Vukile Property Fund has approached it with a cash and share buyout offer. And New River REIT has gone to Capital and Regional's largest shareholder, Growth Point, with an expression of interest for a possible cash and share offer. The company says it hasn't yet received a proposal from New River. It's also cautioned that there can be no certainty that any firm offer will be made. But Capital and Regional has stated that it will issue a further update if and when appropriate. Vukile and New River have until June the 20th to either announce a firm intention to make an offer or state that they are walking away. Further afield, China's Lenovo Group reported a 9% rise in fourth quarter revenue to $13.8 billion. As the world's largest maker of personal computers exits a demand slump following the aftermath of the COVID-19 pandemic. Here's more detail in this package report.
Revenue for Lenovo powered up in the fourth quarter. The Chinese tech group said Thursday it rose 9% to $13.8 billion, beating analyst forecasts. Lenovo's net profit for the January to March quarter rose 118% to $248 million, also ahead of market expectations. The world's largest maker of PCs exited a demand slump following the global health crisis. It also marks a second consecutive quarter of revenue growth for Lenovo. Before that, the company had seen 5 straight quarters of revenue decline in a post-COVID slowdown. Last month, a leading research firm said the global PC market has finally returned to growth during the first quarter this year after nearly 2 years of decline. It also said Lenovo is number one with almost a quarter of market share. The company is actively exploring opportunities in AI and expanding its non-PC business such as smartphones, servers and IT services. It's a new type of computer configured to effectively run AI applications.
And German CEOs are raking it in, bagging big checks in 2023. Let's head over to our reporter Darling Lachela and the DW team for more insight on this.
That's right, Zinati. Now, German CEOs are making more money again after seeing their salaries drop in 2022. Last year brought raises for the top brass. And joining me with greater detail is Lars Halter from Deutsche Welle. Thanks so much for your time today. Now, Lars, how much money are we talking about here?
Thanks for having me. Well, let's look at the headline number first. 208 million euros is the total pay for the CEOs of 38 German companies listed in the country's blue chip index, the DAX. That's 2% more than the year before, and it comes out to just over 5.5 million euros per CEO. Of course, they're not all making the same. There are 3 CEOs who've made more than 10 million euros. That is Ola Källenius at Mercedes-Benz, Belén Garijo at pharmaceutical company Merck, and Theodor Weimer. He is the head of the Frankfurt Stock Exchange. Now, some CEOs, of course, are making quite a bit less. The 2 guys heading online retailer Zalando made less than $250,000 each. And then there's outliers like the CEO of Porsche Holding, who made just over 1 million. Then again, he is not the head of the Porsche car maker, but merely head of the holding of the same name, which essentially is a holding company for Volkswagen shares.
Now, with German CEOs making more money than last year, can we assume that their companies are doing well too?
Sadly, that's not the case, and that's what makes this yet another story of corporate greed. As I said, the CEOs of those top listed companies made 2% more than in the year before. The profit that companies made, however, is down by about 15%. All in average, of course. So this trend is once again breaking a rule that used to be key in the corporate world. If business is up, salary and bonuses are up. If business is down, so are salary and bonuses. Now, it is worth, however, looking at some companies in detail, and we can see that while the overall trend is not great, it is also not that bad everywhere. Some of Germany's top earners are those car guys. Ola Källenius at Mercedes, he benefited from some bonus payments that are only due every couple of years, so they're distorting the picture. Or look at Daimler truck boss Martin Daum. He almost doubled his pay, but that's also due to a long-term bonus that has now finally paid out. There's also a few CEOs whose pay indeed went down. The leaders of Continental, farmer seller Sartorius and realtor Vonovia made between 20 and 50% less than in the previous year.
Lastly, with all those salary and payment numbers, what exactly are they tied to, if not the company's performance?
Well, often the company's performance on the stock market seems more important than real numbers, and last year was a very strong year for DAX shares. However, it would be fair to ask if there shouldn't be other parameters companies should be looking at when discussing their CEO pay. Once again, a look at Ola Källenius here. He's, like I said before, the CEO of Mercedes, and he is the top earner here. And it's really hard to see if he is worth that kind of money. Auto experts have been saying that Mercedes to date doesn't have a promising long-term strategy of how to deal with the switch from combustion engine cars to electric vehicles. That, however, is one of the key issues the auto sector has to deal with an eye on the future.
We'll have to leave it there. Thanks for your time and those insights. That was Lars Halter from Deutsche Welle.